Okay, thank you. Very good morning, everyone. Thank you for coming out bright and early today for the seminar. Okay, it's nice to be the first speaker because I have your undivided attention. Okay, so topic I'm speaking about today is a topic close at heart. Most of us, 80% of Singapore population stays in HDB flat. And so it's also a system where the government has set up that we will help us grow our asset over time. So of late, of course, we have been seeing that in there are certain price movement downwards. Okay, so we'll look at all these figures in shortly. Basically, the idea of this morning session is to give you information on how the market will pan out at least for this year. Okay, and what are your options if you decide to upgrade? All right. Take the opportunity to upgrade to a property, because bear in mind, HDB prices are still a lot higher than what it used to be, and anyone who sells a flat today is not making any loss. All right, so let's go into the presentation proper. So basically, I will cover 5 areas. Number 1, what can we learn from the market trend, and what's the outlook and opportunities for this year? Should you sell? If you want to sell, what should you be looking at? What are the key considerations if you want to upgrade into private property? Because some amongst us here, some of them are first-time buyers, some of them are upgraders, all right, and some are investors. So we'll also talk about some of the hot spots, all right, that you should spread of properties that you may want to consider. Okay, so firstly, let's look at the resale market and what the market numbers are telling us. So prices have been trending down for 7 consecutive quarters. So, but if you look at this chart, it gives you the scale of things. That means it has shown you that resale prices for HDB has actually gone up to a very high level. Okay, the volume of the chart basically tells you this, and it's only in the last 7 quarters that we have seen a downtrend. But the downtrend is very moderate. For the whole of last year, it's about 6% down, okay, compared to the year before. So it's a very moderate decrease. Much of it is due to more to government policy rather than economic or weakness or external shocks. Okay, but what's good to know if you are a HDB homeowner is that the rate of price increase is slowing down. Okay, the rate of price increase is slowing down. And so while some people say, well, this cannot continue forever, I would say that it is showing signs that the rate of decrease is slowing down. So the question is, will the market still continue to decrease in terms of prices for the rest of the year? The answer is quite possibly yes. Okay, but the rate of decrease is slowing down. That's good news. Okay, March. Okay, HDB resale price does down by 0.8%. Okay, this is a month-to-month track using SRX data. Okay, so in general, for the month of March, 0.8% down. But what's interesting to note is that the bigger flats have started to pick up, like executive flats, okay, up 1%. But this is a month-to-month monitoring based on March figures. So I wouldn't look too much into these figures. This is the monthly fluctuation depending on what has been transacted. For your take on the market, how to get a feel of how the market is moving, you always take a step back and look at the broader trend. All right, that will tell you what the direction is moving. So the quarterly figures would give you a better sense of direction in overall. Okay, so these are the month-to-month track. I wouldn't take too much time on this. Okay, those of us who stay in mature estates versus non-mature estates, okay, you will find that everybody is experiencing a price downtrend, a very moderate price downtrend. But what is worthy to note is that if you own a flat in a mature estate, the rate of decrease is slower than a non-mature estate. Okay, for obvious reasons, the price holds better. Okay, so look at the box. Okay, the mature estates over the year, okay, to date, okay, has down by about 4.8% compared to non-mature estate is almost double the rate. So the price holds better for mature estates for obvious reasons because of the scarcity, the less flats for sale, more buyers. Okay, these statistics are called TOX, transaction over X value. This is generated by SRX. and basically it tracks the amount of money that people are either overpaying or underpaying for their property based on the market generated transaction value. So what's interesting to note is that for X value, okay, it is down to about 3,000 negative, okay, so which is a good thing because it's an improvement over the 4,000 and all that. So if you see this figure very high, negative 10,000, negative 20,000, that means the people are actually paying a lot lower than the previously transacted prices. Okay, but this is a very slight negative, minus 3,000. That means it sort of tells you the market is quite stable. All right, it's trading conservatively, okay, but it is whoever is selling the flat today is not selling a lot less than what has been valued. Okay, so volume last year was very low, historical low, 17,000 only. Okay, so for those of us in the agency business, this was a very bad year. All right, but what's interesting to note is that the volume on a month-to-month basis this year has rebounded. Okay, I want to show you this figure. All right, the market has picked up from February. There's rebounded by some 20-30%. Okay, in terms of volume, and it's a good sign. It shows that the sellers are finding buyers. It also shows that buyers are more confident to pick up units from the resale market. Previously, a lot of buyers shunned the resale market because of the high cash over value, the premium. All right, but now it doesn't really happen anymore. Okay, because of the change in procedure as well as the more reliant on market transaction data to make buying decisions. So the market is now behaving rationally. All right, when people go house hunting, they look at what has been sold. Okay, and when people set the price to sell the flat, they also rely on transacted data, which is published, updated on a daily basis on the HDB website. Okay, so if you are HDB flat buyer or seller, just go to the HDB website. The data is updated. The sales transaction data is updated on a daily basis. So this gives you the best, most up-to-date information. Okay, so what's the outlook for the rest of the year? We see that the market will continue to trend downwards, okay, but the volume will pick up. Okay, the price will continue to moderate. Last year, if you remember, the whole year, the HDB resale price went down, moderated by about 6%. So this year, it could be less than 6% because the rate of decrease has slowed down. Okay, so it's not alarming. Okay, consider the fact that the price has, if you bought your resale flat, say 10 years ago, okay, you would have doubled in value. All right, so considering there is some moderation in the market, it is not alarming. Okay, volume is picking up. If you see the bar chart, all right, we will expect the first quarter one to be higher. All right, so we are moving along. Okay, this year it shows that the volume of transaction has actually picked up. Okay, now the price cannot, but some people say the volume pick up, how come the price don't go up? Okay, very simple reason, because the measures that have been implemented by the government, all right, are still there. Nothing has changed. The government has not reversed any of the policies that it has put onto the market to cool the market. All right, so while there has been a lot of talk that will the government do anything, all right, to reverse any of the thing, I think so far they have been silent on this. Okay, so far they have been silent on this. So of course, those of us in the business, we are quietly optimistic and hopeful that the government will do something this year, being SG50, okay, and to make all of us home sellers, all right, homeowners a bit more happy. Okay, so anyway, let's just quickly run through what they are. They are both demand and supply side measures. We'll look at the demand side measures. Basically, they cap the loan. The way you can borrow money, all right, is no longer free for all. It's very regulated. All right, so I think later Alfred will talk a little bit more about interest rates and all that kind of thing. You get a better idea of the sense of loan. All right. Number two, there is the mortgage servicing ratio cap. All right, if you buy HDB property, you take a loan, there's a cap of 30%. That means your monthly financing cannot exceed 30% of your income. All right, there's also a difference in separating the Singapore buyers from PR buyers. PR buyers have to pay a ABSD or additional buyer's stamp duty of 5%, whereas Singapore citizens, you are qualified for remission, means you don't actually need to pay if you buy before you sell HDB flat. Okay, so for PRs who own a HDB flat, they're not allowed to sublet the whole flat anymore. And if they were to buy a private property, they must sell off their flat. They cannot keep. So the only people who can keep their HDB flat and yet buy a private property and are the Singapore citizens. Okay. So this basically forces supply into the market. If you are PR upgrading into private, you already have to dispose of your HDB flat. Okay, supply side measures. All right, HDB has ramped up their supply in the since 2011 elections, okay, to almost 100,000 flats over 4 years. All right, a lot of us were very concerned that this could cause a major oversupply in the market. All right, but this has yet to happen because these flats that were built, okay, over this time, they are not available for resale yet. The people who are just getting their keys to the flats, all right, and they will be at least 5 years before the first of these flats come onto the resale market. All right, it's a good thing that this year they decided to cut the supply by about 23%. Okay, and so we're seeing only a total of 16,009 new flats this year, which is a good thing for us, those of us who are considering to sell our resale flats. It means that there are less flats, okay, for the first timer to look at. Okay, and with the stabilizing resale prices, more of these buyers may come to look at your flats. So that's why it also explains why in March we are beginning to see a pickup in the activity, right? Because while the government in the previously sold flats every other month, okay, new flats are now sold only 4 times a year. So they slow down the number of sales. They also decrease the number of units. So this will help us in the resale market. Okay, you may have caught these headlines, or rather this came out in the Sunday Times last week. Those taking keys, more of them have chosen to give up their deposit. Okay, but while this came out in the news, I want to tell you that it is not alarming. Very simply because the number of people collecting keys has increased significantly. So that's why the overall numbers, okay, if you look at it, it does look a little bit alarming. Oh, previously we had 93 people, now we have 495 people give up their deposits. Okay, these people are probably doing it for various reasons. We do not know what is the particular reason, but the point I want to make is this: anyone who buys a new flat today, all right, even at today's prices, if you were to wait for your 5-year minimum occupation period, I'm very sure that nobody will sell at a loss because you're talking about 5 years later, right? And flats are sold to you basically at subsidized price. So these may be very, who may be people who are not really need their flats. So they are very happy, actually very happy with their existing one. They just happen to get a new flat, so they will do their calculation. So there were various reasons of why people give up their flat. So while this has increased, it is not alarming, okay? So let's talk about selling your flats today. In order to, some of us may want to sell and move on, okay? Some of us will want to buy private property and hold on to our flats. But whatever the case, if you want to sell your flats, what are key considerations? Okay, the key consideration today is realistic pricing. Okay, we do a fair bit of resale transactions. Our company accounts for about 42 to 45% of resale transaction in the market today. So that means out of every 10 flats, about 4.5 is sold by our company. All right, so in order to move your flat today, all right, to sell the flat today, realistic pricing is key. All right, the buyer who comes in to look at your flat today, he is constrained by financing. The very strict rules about financing, and also the fact that he can only secure the valuation after he has gotten the option to purchase from you, okay, puts the buyer on a very conservative mode. That means he will not dare to overbid for your property. So most of the buyers come in to look at your flat, they would be more or less very conservative in their. Of course, there are some low ballers. You know what's low ballers? They give you a ridiculous price. Then you can really ask them go fly kite. Okay, but then again, in order for any transaction to take place today, it has to be realistic pricing because the buyers are very price sensitive. If you go onto the market with a very high price and you refuse to adjust your price to market, basically you're helping your neighbors sell their flat because your neighbors who are more realistic, they'll move their flats, but not yours. But you find that you will have a lot of viewing, but nobody buy your flat. Why? Because they all come and compare. See, this one so high price, okay, that one so low price, okay, everybody buy that one. All right, so it's a very simple consumer behavior, all right, that people will go to get the best possible, okay, a deal for the money today. All right, and the important thing to note is that we are not really losing money today. Okay, why? Because if you look at the property price index for HDB flats, over 31 quarters, that means over about 7 3/4 years, the price has gone up by 104%. That means essentially your price double, more than double. Okay, but over the last 7 quarters, the price has only gone down by 9.2%. All right, so proportionally speaking, there's still a lot of a buffer, all right, that we are looking at. So if we put this on a price gain chart like this, you find that there's actually 76% gain over 10 years. Nobody that is selling today actually lose money if you had bought your flat, say, 10 years ago. All right? Okay, let's talk about rental market. Some of us who, there are a fair amount of people who move into private property, they actually rent out their flats. Okay, so what's the rental market for HDB looking at? Okay. It is very high volume. In the last year, the volume has gone up by 20% if you compare it to 2013. That means average per quarter is about 9,000 units being rented out in the market today. Compared to 2013, the average is about 7,500. So there's a fair increase in the total volume. So why is this so? Okay, firstly, rents continue to, the demand is high, transaction volume is high, but the rents are pretty flat. In fact, the rents have been coming down. Okay, why? Because it's a supply-demand situation. The condo market, okay, if you are aware, okay, a lot of new projects are being completed, and basically all competing for tenants. So previously, a fairly well-located HDB 5-room flat probably rent for 3,000 or more. Now it's not so possible. All right, it'll probably be well below 3,000. Okay, so but the support level for HDB flat is about 2,500. So if you're renting at 2,500 and below, you have a fair amount of tenants looking at your unit. All right, most of these tenants, who are they? All right, number one, if you remember, our government has this policy now that if you are a new PR, you have to wait 3 years before you're allowed to buy your resale flat. So all those new PRs cannot buy any HDB flat at all. They have to wait 3 years. So for the time being, if they have just become PR, they will be renting. All right, and unless they have a high budget, okay, most of them will be renting from the HDB market. Okay. Secondly, there are those people who, a fair amount of people who move into their condo, okay, and because they have already cleared their mortgage for their HDB flat, a lot of them are actually renting out their HDB flat. They don't want to sell because they're afraid that after they sell, after they move into the private condo, if they want to come back to the HDB market, they have to sell their condo. So this is the new policy that is affecting the buyers. So I myself is one of those affected. Many years ago when I sold my HDB flat, okay, moved into a private condo, I was very happy. I thought that one day I will come back and buy HDB. So now I'm in a private, I can't buy HDB. If I want to buy HDB, I have to sell my private. So a bit caught in. All right. So, all right. So let's look at now the private residential market. If you are considering to pick up a unit, okay, in a private residential market, what are the key considerations? All right. A few things you have to note today, which is very different from pre-cooling measure days. Okay, since June 2013, the whole landscape has changed. You have to be a little bit more, you have to do your homework first. Okay, so what are the few things you need to consider? Okay, so what are the key considerations of buying a private residential property or an EC? Okay, the first thing you have to understand is the loan mechanism. Okay, the way the banks can lend you money today, they are regulated by MAS. So the total quantum of loan that they can lend you very much depend on how many housing loans you have existing. So for example, if you have cleared your loan, you have no housing loan on hand that you're servicing, you walk into a bank, you can get up to 80% financing. But if you already servicing a current loan and you want to pick up another property, which means that is your second property, you only can get 50% loan. All right, which means 50% equity, your own money. Right? But if that is the third property you're going to buy today, and you're one of those fortunate few who have the capacity to pick up a third property, the bank can only lend you 40% max, which means 60% equity. All right? So this is the loan quantum. You have to figure this out before you make your move. Secondly, the tenure, how long you can borrow the money for, depend on how old you are. While previously there's a simplistic calculation, 65 minus the age of the borrower equals to the term of the loan. Now the bank has to look at the joint borrowers. If they are buying the property together as a joint borrower, basically the bank looks at who earn more money, okay, in the joint borrower. So for example, in this thing, if the younger borrower earns more than the older borrower, let's say joint, one older, one younger, the younger one earns more than the older one, you will be able to get a longer loan. Okay, but if the older one earns more than the younger one, then they have to prorate. That means you will be only able to qualify for a shorter loan term. Okay, so all this is guide only, guide. What I'm showing you for the specific, how many years and all that, you have to talk to your banker before you go house hunting. All right. So the other thing that we all aware of is the total debt servicing ratio. Okay, which we all call total damage to Singapore residential. All right. So this is the 60% obligation, all right? Monthly debt obligations divided by your gross monthly income cannot exceed 60%. Okay, but if you are going to buy EC, those first-timer, second-timer, all going to buy EC, you have two ratios to clear, okay? Number one is the TDSR. Number two, you have to clear the mortgage servicing ratio. Total debt servicing ratio looks at all your debt, but mortgage servicing ratio looks at only the mortgage that you're paying. So you have to clear these both ratio to the amount of money you borrow from the bank, you have to clear these two ratio. Okay, so again, this is as a guide. Okay, the ratios are there, how to calculate, what is the thing, you have to talk to the banker. Okay, so just give you a perspective of what is what. Okay, the red boxes they are all your commitments. That means all your monthly commitments every month divided by your income. Your fixed income, variable income, bonuses, rental, whatever, must be less than 60%. This is called total debt servicing ratio. Again, please talk to your banker. Okay? Mortgage servicing ratio means they only look at mortgage. That means whatever you pay as a mortgage divided by your income, okay, must be less than 30%. Okay, so as a guide, and this is a guide, don't take this as a truth. You have to specifics work out with a banker. All right, so as a guide, if you earn $12,000 per month, you take a 30-year loan, okay, the maximum loan you can take to clear the MSR ratio is 800,000, okay, and the maximum loan, if you don't need to clear MSR, that means you're buying private property, you can actually borrow up to 1 million. Okay, so this is the irony in the market. To buy a cheaper property, you can only borrow less. To buy a more expensive property, you can borrow more. So actually, those people who don't have other kind of debts, all right, you find that they are more advantaged. Okay, when it comes to buying private property, they have a whole 60% to play with. That means if you have very low other kind of debts, like you don't have a car loan or you have very little car loan, you have very little unsecured credit, you actually have an advantage in the sense that you can take more loan to buy a higher value property. Okay. Right. The other important thing you have to take note of is the additional buyer's stamp duty. And the fact is that additional buyer's stamp duty must be paid within 14 days of you signing the sales and purchase agreement or the option to purchase, which means even though you may be able to get your CPF to pay for this, but you have to pay first because there's not enough time to activate the CPF. All right, so have to factor in the cash portion first. All right, what are some of the hot spots to consider if you are looking at property today? All right, so these are some recommendations which I personally feel, all right, worth looking at. Okay, so the first group I will show you some of these properties. They are the won't go wrong one. Won't go wrong means what? near MRT, near amenities. Okay, so you must remember in future, there will be MRT station everywhere. Okay, there will be MRT station everywhere. So the question is this: if your home is not near MRT, that means you're not normal. All right. So all right, if you want to be normal, all right, or rather you want to pick up a property that is a given, all right, that means near MRT, near amenities, then may want to consider some of these properties. They are already in the market, okay, selling pretty well, all right, but worth considering, okay. So first one, if you are East Coast person, then perhaps look at the Glades. Glades is 1 minute sheltered walk to the Tanah Merah MRT station. Okay, you don't have to be in the rain. So the prices are pretty decent. Okay, 1 bedroom, 654. Now they're having a promo. So this is the promotion price. Okay, 1 bedroom you can pick up from 654,000, 2 bedroom from 775K. Okay, I think if you want to feel the project, go down to the show flat. All right, so the units, these are the price. They are very, very, very reasonable prices. Okay, no developer today is holding high price. All prices have been adjusted, all right, to move at the current market pace. Okay, the other one that is perhaps looking at, if you want to be in a mature HDB estate and yet not facing HDB, okay, is perhaps look at the panorama. The panorama have this unblocked view because it has facing the landed property area. Okay, the landed property in Thomson and Sembawang Hills. All right, so this is built by Wheelock. Wheelock is a high-end property developer, so they build things like Ardmore and all that kind of thing. Okay, so this is one of the projects to consider if you want looking for a view. Okay, within a HDB estate, yet you won't get a lot of HDB view. All right, so you have spectacular views. So again, okay, is their units are bigger, so the pricing a bit higher. All right, but bear in mind, most of the transactions last year as a trend, okay, you want to understand what has been transacted in 2014 for private property. If we put resale and new homes together, okay, 70% of market transactions in 2014 last year is 1.5 million and below. Okay, it's 1.5 million and below. The sweet spot, that means the one with the most number of transactions, is between 800,000 to about 1.2 mil. All right, last year, about 45% of transaction is about 800,000 to about 1.2 mil. So this gives you a sense of where the market is, what the market is buying for the whole of last year, which is the full year implementation after after the TDSR. Okay, so the trend is quite similar this year. You find that most of the units that move, okay, are all within this sweet spot zone. Okay, the other one to look at, Bishan, all right, Skyview, all right, it's not next to MRT station, but it's very near. It's a short walk, okay, less than 10 minutes. All right, so you have small units, okay, nice views because it's very high, all right, 883K for 1 bedroom and 1.156, all right. Okay, now what if you say your budget is lower? I want more space and I want to pay a lower price. Okay, I want a bigger space, I want to pay a lower price. Tall order. Okay, some things to consider. Okay, the only way to do that is you have to look at up and coming locations. That means you're buying into these locations which are not there yet. It's going to be there in one day. Okay, it's up and coming location. You must, okay, whoever you buy property today in Singapore, you must take a longer term perspective. You don't expect to buy today and tomorrow you can sell for a huge profit. That market condition does not exist already. Okay, you have to ask yourself, if you buy today, in about 8 years' time, 10 years' time, what is my exit strategy if I want to exit? Will I make a loss? Will I make a profit? Okay, would it be easier for me to sell in about 10 years' time? Answer is you must position yourself in a way that you're able to enjoy the upside if you want the upside. So the only way to enjoy the upside is to buy low, sell high. Everybody know, right? Okay, so how to buy low? You have to go into a location which is called up and coming. All right? So up and coming means, in today's context for private property, below $1,000 per square foot. Okay, below $1,000 per square foot is the domain of EC. Okay, but if you don't want to buy EC, you don't qualify for EC, then you have to look at private property. Okay, what are some of the projects to consider? Number one, Santorini. This is in a part of Tampines, all right, that today people say, but this one not in the main Tampines area. Of course, if it's in the main Tampines area, the price is very different. This is in a section of the Tampines where the HDB and the government now is putting effort to build. Okay, so in a few years' time, this whole area will look totally different from what it is today. Okay, but you're buying at today's prices, all right, which means, okay, you can get a 2-bedroom for about 780,000. Okay, 2-bedroom dual key. Wow, can rent out some more. All right, 971,000. Okay, a 3-bedroom is about 1.1. Okay, so this is in Tampines. You leverage on the established connectivity of Tampines, yet you don't pay the Tampines downtown price. Okay, the other one is Real Bank at Fernvale. Okay, Real Bank at Fernvale, Sengkang West. Okay, this is next to the river. Okay, if you like biking, you like outdoor, you like running, jogging. Okay, you direct access to the riverfront. Okay, you can enjoy it, and the units there are bigger and cheaper. Okay, again, this is a up and coming area. All right, up and coming area, you don't pay the premium for the established area price. So something to worth looking at. Okay, then some people say, I want something different because I want to enjoy a lifestyle. Okay, I want to enjoy a lifestyle. My lifestyle, I want to enjoy a good lifestyle, nice property, nice view. Okay, yet I don't want to pay a lot of money. Well, again, tall order. Okay, so what are some of the things that can give you this quality, that you can have something to shout about, that is a landmark? Okay, so the first one is Kingsford Water Bay. It's the last month's top seller. The statistics just came out. In March 2015, this is the top selling project. Okay, why? Because this is the project with the longest waterfront view. Okay, if you go to the show flat there, you will understand what I mean. Okay, if you like peace, okay, you like nature, you like to wake up to the sound of birds, okay, chirping in your, okay, you hear birds, all right, then this is the place to go. This is nature, okay, and this waterfront, if you run along there, it connects you to Punggol. Okay, you can Punggol all the way, waterway, if you can run that long. Okay, but basically it's all connected. And the other side is the longest man-made water feature. Okay, all pool and water views all the way. So whichever side you choose, you face water. Okay, so if you are crazy about water, all right, this is a project to look at. All right, just started selling, prices are quite reasonable. Okay, so how reasonable? 1-bedroom, 500,000 only. Okay, 2-bedroom, 650,000. This is last week's newspaper. All right, so again, it's steadily selling. Okay, steadily selling. Last month's top selling. Okay, the other one is Waterfront at Faber. Okay, you want to enjoy the waterfront housing, yet be near to areas of employment, the Jurong Gateway. Okay, you know Jurong Gateway is a big thing, right? The government are putting a lot of money and resources into Jurong Gateway. But if you go to Jurong Gateway, you get a sense that it's very crowded. All right, I stay around there. So I go there sometimes for dinner and all that. Wow, very crowded. Okay, so you want to live near there, but you don't want to be there. All right, if you're there, it's a different kind of stress level. But this is near there, yet not so stressful. Okay, so again, if you have come to that stage where you say that I want to enjoy some peace and quiet, and yet want to be convenient near to places, then projects like this. Okay, best of both worlds. This one, I think all the small units have gone. Okay, only left with the 3 bedrooms. They're all about 1.2, 1.3 onwards. All right, selling also pretty well. All right, so these are the projects. All right, now, if you are a first-time home buyer and you want to buy EC, executive condo, all right, there are a few in the market today, but I want to excite you with a new one that's coming on stream. is yet to be launched. Okay, we just hit the 15-month time bar from the government, so now I can release the information to the public. Okay, this is the first executive condo with a bike theme. Okay, never see before. I sell so many property before. I never see before something like this. Okay, so you know nowadays more and more people are cycling. Okay, when you're cycling, you have two problems. Number one, where to store your bikes. Okay, if your whole family is cycling, you got 4 bikes. That's like me. Okay, you got 4 bikes. Where to put your bike now? Right outside my house. Wow, they're crowded. Okay, I don't have a separate storage. Number 2, if I don't want to cycle outside, can I cycle inside? In the condo today, cannot. All right, so this one can. All right, so what does it look like? Okay, firstly, where's the location? Okay, EC, you know, have always got this problem. Surrounded by HDB flat. That's what a lot of EC buyers say. Oh, surrounded by HDB flat. Okay, but this EC is in a private landed estate. That means when you come home every day, you drive. You drive through a private landed estate to get home. The feeling is different. Okay, yeah. Right. But yet, you are within the HDB estate. So this is exactly where it's located. Okay, so this is what it looks like. Okay, so depend where you look. All right, all the landed property, you're within a landed property. Okay, so if you follow the news, you will notice that the last EC that was launched in Jurong is snapped up within a weekend. All right, over a weekend. So this is the second EC and the last one in Jurong. Okay, so again, all right, no more upcoming ECs. So this is the last bite of the cherry. Only 480 units, very good size layout. Okay, first EC to have its own mini velodrome. You look at this. That means, you know, you watch sports, right? You see those people, they'll cycle and chase each other round and round the track. Okay, so you have this inside your condo. Okay, you have your own velodrome. All right. Then the next thing is where I'm going to park my bike. Okay, there's a secured covered bike storage. Wow, check this out, man. Not only park car, no, you can park bike. Okay, nowadays people spend a lot of money on their bikes. Okay, I have a cycling fanatic friend. You know his bicycle how much? 25,000. 25,000. Of course, that's a higher end. But most of the average biker will spend a few $1,000s on their bike. Okay, yeah. All right. So it's another area of luxury that most people have. So now you have this thing. Okay, and you don't have to worry about your neighbor going to take your bike, your $25,000 bike, and ride away. Because why? You can only draw your bike, your handprint. Okay, secured bike storage. Cool, EC there. Not high-end condo. No. Okay, so you have this. Then you have the bike maintenance area. Do you have this problem when you cycle, you go back, you don't know where to wash your bike and maintain your bike? All right, so you have this garage that you can actually go and check out with your other fellow cyclists, compare notes. All right, hey, wow, this part good, that part good. Okay, wash, okay, and service your bike. Cool, very cool. Then if Papa cycle, what about the kids? Then the kids look at the Papa and say, hey, I also want my own bike. I also want to cycle in the velodrome, but then the velodrome, all the big bikes. So they have the mini, biking area for kids. All right? So it's also for them to learn the traffic rules, that you don't have to go to East Coast Park to do it. All right? You can do it in your own condo. Quite cool. Okay? Then for the older kids, you have this BMX thing. Okay, so from the very young to the teenagers to the bike crazy people. All right? So bike all the way. Okay, not only all bikes. Okay, of course, the other condo facilities, I don't need to show you. It's all standard. But this is the unique part of the condo that you never see in any condo in Singapore. So it's going to start soon. The show flat will be open soon. Okay, and those of you who are looking as a first time or upgrader to pick up an EC unit, this is something worthwhile to look at. Okay, for those of you who have children who are of the home buying age and you decide to help them to choose a unit, okay, this is something to worthwhile considering. All right, so these are some of the hot spots. Again, there are many, okay, but these are, from what I've looked at so far, these are some of my personal opinion. Okay, so of course, different people will have different opinions. So I just want to share this information with you. All right, of course, if there's anything, you can always ask me. All right, I think that's about all I have. Thank you very much.